market when I've been gone. You guys can't stop buying Tesla. It keeps going up every day. Holy cow. And then there's certain stocks just going straight down as well. This is going to be a fill-in Denny day because I've been away for a week and I kind of feel naked here. So we're going to rely on you, Christian Fromhertz, pre-market prep, to get a feel for what's going on with this market. Let's rock. The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves.
I don't know. I guess that's the intro for today. Whoa, there we go. I think we're live.
We're good. We're live. We're trying to figure it out. So my computer did an update while I was gone. Of course it did, because that's what it does. And somehow I've been logged out of StreamYard and I can't get back into all of the services. So we're relying, Christian is running everything here right now. Joel's still away for a couple of days. AB's out for a couple of days. But you got me, Christian. We're back. I think we screwed up a few things already, but that's okay. We got content here. Christian's rocking and rolling. I'm feeling pretty good. I can tell you a little bit about the trip if you want, Christian. It was very interesting. So took the kids to Florida, got down to Florida last Friday night, and I felt awful. I was like, I am like coming down with something wicked. Saturday, still feeling sick. I'm like, I'm not feeling good. So I'm calling my call-a-doctor, which is Joel's wife, Lisa. Call up Lisa, and I'm like, I am not feeling good at all. I'm coming down like some wicked flu or something. She sent me Tamiflu, took that. She said, if you don't feel better in the morning, go to an urgent care down there. So by Sunday morning, I was like shivering, just feeling really awful. So I go in Sunday morning to an urgent care. They give me an x-ray and I have pneumonia. So I literally go to Florida and I get pneumonia. I probably had it, obviously, and didn't know I was coming down with it. So they give me some antibiotics, some steroids. 2 days later, I'm at Disney. So, I did bounce back from pretty well. Miracle of antibiotics. But anyways, back to the markets here. Holy cow, Christian. I mean, this is like the tale of two markets, really. When I'm going through charts this morning, trying to fill myself back in here, and there are stocks up, there are stocks down, certain stocks just relentlessly higher like Tesla. But then I've got a little position in Nucor that I started. What happened to that? I mean, it was 145 when I went away last week. It's 125. Did that like pre-announce or something? Like it's just down $4 or $5 every day. I mean, right now it's like you've got a growth story or you've got nothing. There's certain other stocks too. Warren Buffett's Oxy looks like it's breaking down. Oil doesn't look, really that, oil stocks look okay, but some of the other oil stocks are going down here. What a tale of two markets. Can you guys like fill me in on what's going on?
Yes, let's fill you in. You did miss a lot, and this is going to be a good catch-up day because it's been a pretty bizarre market that we've seen. Let me go through the what Mr. Joel does, and I will go through S&P futures just to kind of give you a sense of what's going on here. But S&P futures, I'll just start with those. They're up 20 basis points, and we've been kind of consolidating here. I'm going to just insert a couple things just for Dennis so that you can kind of get caught up. But like here's what you're referring to. This is the RSP, which is the same names that are on the S&P 500, but they're equally weighted rather than market cap weighted. And I think there's 10 red candles in a row. So to your point about Nucor is a value stock. Take a look at what the value ETF has been doing. It's the same, it's very
going
close.
Down.
It's just been going straight down. Now, look at the VUG ETF. It's a little bit better. Right? It's actually hanging around the highs, doing pretty good. No real complaints there. But if you're stuck in some value stocks, I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red candles in a row.
Wow.
Lucky 11. Let's roll the dice today and see if we can get a green candle today. Let me go through the rest of the commodities, but that'll give you some food for thought in terms of catching up a little bit. Crude, we got down about 1% for the day. We got nat gas this morning, which is down 3.2%. Every time this nat gas seems like it wants to get going, it kind of comes back in a bit. So nothing major there going on in commodities. I'll also bring up copper because I like to know what copper's up to. Down about 70 basis points. Mr. Gold. Whoops, I got the wrong gold up here. So let's try this again. Gold futures. There we go. Gold futures up 10 basis points. It tried to get going in the beginning of last week and then kind of fizzled. And we're right back into the middle of the range there in gold. Silver futures, also the same thing, catching a little bit of a bounce this morning, up 0.3 of a percentage point, but doesn't really change the trend. Here's another one for you, Dennis, that I think is really interesting, although I don't know why I can't bring this up right now. But taking a look at what bond futures are doing, we're looking at just at the daily chart of bond futures. Now, they're catching, again, a small bounce today, up 20 basis points. But look at the move in what's happening in yields. And we're on prices here, but this has gotten like a waterfall type situation, down 1, 2, 3, 4, 5, and that's one of the culprits in terms of what you got going on in small caps, why they haven't been performing very well, because all that up move that we saw for about a week and a half has all been given back. Let's look at Bitcoin as well this morning. Bitcoin, I believe, was up. It got a nice start. But it seems like sellers are kind of coming in here a little bit, because it got all the way up to about 107 in the futures, and is now back down to like 103. What's the last price on Bitcoin futures? Right around 104. Is that right? 103,670. So the good thing is we're above 100,000, but we're kind of stalled at the weekend move that sometimes that you see. I'm just going to bring up a couple other things here really quickly.
Yeah.
Ethereum also got off to a good start, but that's kind of fizzled again. Geez, that's my word of this morning is fizzled. And then let's just bring it back to NASDAQ futures, which are outperforming once again. And that's really was the story last week, is your big names, your big tech, big growth did really well last week. That's climbing another 0.4 of a percentage point, and very close to intraday highs. And then here's the Russell, which again, this is the one completely not performing very well.
Yeah, Tom Lee rally not happening here.
Not yet. I mean, we are getting close to, and so this is my question to you, Dennis. Now that you're back, and hey, you picked a good week, to kind of leave because of the price action and the overall, breadth of the market wasn't very good. But now that you're back and the seasonality is supposed to kick in for December, the last 2 weeks of December are supposed to be pretty strong. We're not at the Santa Claus rally yet, but yeah, this should kick in, and it could be the triple D effect.
I mean, and again, this is a good exercise. When you go away for a week, and this is why I don't like going away, you come back, you kind of feel naked. Even though you're watching on your phone a few stocks, you're not at your systems, you're not at your desk, you're not seeing everything, you're not in the action. It's almost like, oh, you're just, getting the updates, watching your highlights from your sports game. You're not in the action, so you don't have that feel. So really, it takes a day or two to get the feel back. So it's a good exercise to go through a bunch of charts of different stuff to try to get a feel for really what has happened. And obviously what has happened is we've seen separation here. Just going through in the last 5 minutes what you just did, I can clearly see separation between growth and value. Growth stocks still holding on fairly well. Obviously, value stocks starting to lag. Lower PE stuff not performing. Higher PE stuff continuing to go higher regardless of those high PEs. I mean, and again, bring it to Tesla here, because I was watching, obviously, Tesla over, the course of, the last week. When I went away last Friday, the stock was $389. It's 439. I tacked on another 50 points. I mean, this has just been an incredible move here. People hate the stock because obviously it's got the high PE, doesn't make any sense. It's a cult stock. You listen to all CNBC garbage, that's what you get. Listen to PreMarket Prep, and we're telling you there's a story here where eventually earnings are going to start growing like crazy on this thing. And that's what's really going to be the driver. I think the market's just getting ahead of it. Now, is the stock ahead of itself? Well, it was $250 a month ago. So you're talking about stop up 70%. So yeah, it's probably ahead of itself at this point in time. I haven't sold any shares, but at this point in time, in the long-term portfolio, that is. But at this point in time, it's like, well, you probably need a dip or something. Like chasing it here when it's 350 a week and a half ago to 450 feels like, the chase is on. But I mean, it seems like every time this thing dips a little bit, you just have more people willing to buy it. And then the opposite story, because everybody says, again, looking at CNBC, oh, Ford, GM, 5 times earnings, Tesla, 100 times earnings. Why would you ever buy Tesla? Well, look at Ford here. Ford's down again today. catches a downgrade from Jefferies to sell, underweight, $10.11, can't find its own way. And I mean, the story here is ice cold. Do they still sell cars? Yeah. Do they have Ford Blue? And do they do, are they working a little bit on, FSD? A little bit, but nothing like Tesla. So, I mean, the story here is just ice cold. General Motors, same story. Story's ice cold with $60, down to 52. Value names underperforming. What turns that around, Christian? Like, what all of a sudden? Is it just like a dime? Everybody likes value all of a sudden? It doesn't happen like that.
Right. I was just going to interrupt you because as we were talking about Tesla, we do have a price target upgrade by Wedbush, ups Tesla target to they say 6. I guess this is.
It's Dan Ives.
Yeah. Okay. So is it 650? Is the Wedbush analyst?
I think they had a bull case scenario. So I think they upped their price target to 515. But then the bull case scenario up to like 650. And Dan Ives has been all over this story. Let's give Dan Ives some credit here because he's been all over all these stories, from the Palantirs, the Teslas. And that's the stories that have really continued to drive price. When the story is hot, valuation doesn't matter at all. There isn't a hotter story than Tesla right now. There isn't a hotter story. Is he going to cool off eventually? They all cool off eventually. But, again, is there going to be a driver here behind it? Is the story still going to have lots of traction in 2025? I would imagine so. So dips probably still get bought on this. But then you look, even over to like a Palantir. People have been talking about this trading, and I haven't brought the valuation up lately, but the valuation is crazy. But again, story is hot. When story is hot, valuation doesn't matter at all. Write that down if you never heard that. I say it all the time, but write it down. When the story is hot, valuation does not matter. Palantir trading 161 times forward earnings, 380 times current earnings, 69 times sales. I don't think I've ever even seen that before. The valuation is absolutely insane. With that being said, story is hot, though. Doesn't mean all of a sudden everybody's going to be like, oh, my goodness, Palantir is a little bit overvalued. It was a little bit overvalued 40 points ago, but that doesn't matter. The story is hot, and the stock still remains hot for those reasons. Like, again, when those Momo traders are in, they don't care. Momo traders do not care about valuation. And when they got a hold of it, anything can happen.
I was just looking at the Palantir. So we do have some announcements over the weekend about inclusions, deletions to the S&P, not to the S&P, to the NASDAQ 100. So the Qs. One of those additions, as you mentioned, is Palantir. But I was just looking for news. I don't know. Maybe our chat can chime in here too, because you're not getting the usual oomph that you get for an inclusion here with Palantir. Which
this was Friday night that there was some inclusions and some stocks kicked out.
And the way that they did this too is they did these announcements. I think I was not in front of the screens at this time on Friday, but they didn't wait till usually the S&P announcement after the close, which was the previous week, is done around 5:30, something like this. 5:15. Yep. You know your index time.
I know after hours trading.
But they did the NDX inclusions and deletions at 8:00 at night. So you couldn't do any aftermarket trading. And if you looked and on a Saturday, if you weren't watching on Friday night, you're like, there's a really muted response because the way that they announced them, they didn't give you the chance to kind of boo-hoo. They didn't give you a trading opportunity, I guess, unless you have some access after that. But regardless, I don't see, we can begin to kind of go over these inclusions and deletions, but I don't see any major move out of Palantir. So I don't know, was there a downgrade in Palantir?
Maybe you knew it was coming, priced in maybe too. Again, I was away last week, so it's hard for me to comment on this. But the other ones, you had MSTR going in, correct?
Mm-hmm.
SMCI coming out.
Yep.
Here's a story stock to talk about. Let's talk SMCI. Because obviously it went from $19 to 48. We talked about the 50, didn't quite get there. But I was like, you're coming into major resistance. We talked about this before I left.
We did.
46
we were spot
to 48. On. And I'm like, if you're coming in now, you're way late to the party because you're coming into major resistance. Well, forget about that major resistance. Never quite got there. The high was at $48. They pulled the rug, and they pulled the rug hard. We're down to $32 here now. So now you start to think, okay, if you think that BDO is going to save the day, BDO, those who know BDO. If you think that they're going to save the day, now you start thinking about the SMCI. Now you start thinking, because valuation on this one's actually attractive. Again, I don't know if I can take a shot on it because I don't know what BDO is going to say. BDO comes out and says, we're gone. This stock could get cut in half. I'm not joking. If BDO said that we're out, we're not touching this thing, then you know there's too many shenanigans happening. But if BDO comes out and says, look, they just need to dot some I's, cross some T's, we've done that for them, they look in the clear, then the thing blasts off. So you still have a binary event of an unknown timeline when BDO is going to speak up. BDO did not speak up last week, I assume, Christian, did they? Because I was away and I wasn't looking at SMCI news, but I don't think so. So if they did, forgive me because I was away last week.
The only news that we saw last week for this was that like the NASDAQ was going to give them basically a stay of execution, saying, hey, we're going to give them some more time. And the stock did go up on that. I think, and that was the last higher move, was once that was announced, it did get a lift, and then you could see the sell-off day. And this is exactly, and I don't know if this was while you were out, but I had said, hey, we've now filled the gap, right, for when this made its down move. And my thought was, and I had said it on the show, was if you did a dumpster dive move here and you've got nice gains, now's the time to ring the register. And that was the highs at 47. Again, not telling anybody what to do, but from a technical aspect, it made perfect sense to me.
I think so too. I think it's just a tough stock. So there's so many stories out there that are hot. Some stories ice cold, and then you have this one that's just waiting on a binary event. We don't know when it's going to come out. BDO could take a long time. It could be months before we actually, hear from actually what they have to say. But they did the right thing hiring BDO. They get them in there. They obviously believe. I personally think it's a case of I hope it's not fraud. I personally think it's a case of they just aren't very good at accounting and they don't know what the hell they're doing, so they get in there. But obviously, if there's fraud involved here, then Katie bar the door. The stock's in real trouble. So we just don't know. So at this point, you don't know. But if you wanted to take a shot, you've pulled back significantly here, $32. Again, stock's out of favor. Do you want to go SMCI or do you want to go like a Dell or something where it's a little bit cleaner books? Not SMCI by any means, but with the upside, like SMCI would have significant upside if the BDO comes out and says everything's clear. But I think it's a little safer play. But look at the chart of Dell. Here's another one too. I did buy some more stock at 124 since they reported it starts to leak again. It's not every tech stock, Christian. You see the QQQs going straight up, making new highs every day. You're like, rah, rah, bull market. But then you start really jumping into some charts here. And they're like, well, there's some good ones, but there's some ugly ones too.
Well, I think you're starting to get, and so I brought up Dell because, okay, Dell doesn't have any accounting issues, at least knock on wood that I'm aware of, but you could buy this at cheap. So I know everybody has like SMCI on the brain that that it's going to go up or it's going to return back to its prominence, but why not, if you're thinking that way, why not go with Dell? And now I'm not advocating going into Dell because I don't go into names that had bad quarters, and they had a bad quarter, and it's probably going to be dead money to some extent until they have their next numbers out, or unless they announce something else in the works that could be some new AI feature, something like that.
Need some type of catalyst, really.
But what you're seeing, Dennis, and I'm just going to bring up a couple charts too. This guy, right? This does also not look pretty good.
Not great.
So NVIDIA has broken its 50-day moving averages and is starting to slip. However, it could just be a little bit of a changing of the guards, because this was also the big news that when you were out, were two things. Number one is Apple is partnering with Broadcom for chips that are going to be developed.
Saw that move in Broadcom. Holy
and they had a colossal move. And the thing that's interesting about this chart here in Broadcom is when I bring up the weekly chart, right? And you may think, oh my God, that's too big of a move. But it's kind of just, I'm trying to get my arms around this and say, hey, maybe this is just, following the trend. And it kind of went sideways there for a bit, for a couple months, like Broadcom, where is this? July, basically topped out in July. And it was just kind of going back and forth, back and forth, back and forth. Well, now it resumes its trend. And I think it's up again this morning because we got more price target raises in AVGO this morning. Let me see if I can find that for you. But
to your point, Christian, this is what you want to look for. This is a Christian Fromhertz, chart where you get consolidation near all-time highs. You're getting consolidation after a significant uptrend, where you got a stock moving up, Then you get basically 6 months on Broadcom where it's kind of bouncing around, digesting the move. A lot of times what you see is a continuation of those moves. So sometimes it takes a catalyst, a news event to really get it out of there, which obviously we had. But I mean, more often than not, and it's natural human tendency. And I mean, obviously on this show, we talk a lot of strategy, but we're giving you the news as well. But it's slower news day, so we can talk a little bit of strategy. But it's natural human tendency to want to buy what's down and out. It's natural human tendency to say, hey, look, this stock is cheap enough now. It's eventually going back like SMCI to all-time highs. And I'm going to, eventually make, 20. If I buy here at $32 a day, it's going to be eventually back to 120, and I'm going to triple my money or quadruple my money. I mean, that's the thought process. But that's not your thought process. And this is why you've been successful for a very long time, because you like to buy what is strong, saying, continuation of that strength, as opposed to trying to call turnaround stories. Because the hardest thing, and it's taken me a long time to learn this as well, in my investing, and I still try to be a hero sometimes, but the hardest thing is to, time turnaround stories. It's difficult, where it's a lot easier to just buy stocks when they're trending higher and then consolidating for a bit and then bouncing up here again. I mean, just think about Tesla, and we keep, but it's a good example to momentum trading. Before I left, we went into this November to basically, December consolidation period, say in the beginning of November, after we had the big move, obviously after the election. But, we were 350 back on November the 11th. 1 month later, we were still 350. So we just consolidate at the top of the range, and eventually now we get the move. So a lot of times when you see, you got the big move, consolidate the move, then the continuation of that move, that's where it gets a little bit easier. So, why not cherry pick those good trades? And that's what Christian Fromhertz does so well.
Oh, thank you. I appreciate that. I just, you need a lot of patience for if you're going to go after like the value trade and the down and out. It's not to say that names can't come back, but just like I was saying with Dell, it's usually if you miss on your quarter right now, or if you don't have the right guidance or whatever, you could see it getting beaten up. And on the earnings day, and it just becomes dead money for the next quarter. They have to redeem themselves on the next quarter. Now, so that means like if you really like it, then you wait for the next quarter, and then maybe you go long into the earnings report. That's it. I mean, and again, that's not 100% of the time. They could come out with something new. They could, in the meantime, they could come out with new guidance between the next quarter, and that could be the catalyst for a stock. But it's tough because you're dealing with a situation where it gets unloved because of a real reason, and it's because their revenue slowed down or they missed. So if they're not accelerating, if they're not growing as fast as what people were looking for, there is a real reason why it underperforms. It's just it has lost its mojo.
The earnings hangover, you get a hangover, and sometimes they bounce back and sometimes they snap back on the initial report. You get a whoosh down, the whoosh up. But that next trading day is so important, because it really sets the bar for the next 3 months, to your point, Christian, where, sometimes it's not about the report, it's about the reaction to the report. If the reaction is good and the stock is higher, they're finding reasons to go higher, then, then maybe you got a green light, go. I know I have a friend, Chris, that I've talked about on the show before, Chris Banyan, and I traded with him at Bright Trading for the better part of 10 years. And all he does is momentum trading. All he does is look to the earnings report. When they beat and gap higher, he's buying those stocks, or he's writing puts, or he's, buying calls. He's playing the momentum, the pure momentum. When they miss earnings, he's out. He's gone. And he's typically not taking, he's a momentum trader, so a trader. So he's typically not taking stuff through his earnings. He's waiting for the earnings report, seeing the reaction good, and then he's looking for that gap and go. And a lot of times those gap and goes continue to go, especially when stocks are making new all-time highs, which probably brings us to AMD, because somebody's bringing AMD up. And I have AMD in the long-term portfolio, and it has now turned into a complete dog here. Again, I try not to trade the long-term portfolio. I try to buy good companies, reasonable valuations. It's kind of a different story. Would I be trading AMD from the long side right now? Probably not, because the stock is breaking down and making new lows. Do I have an investment in this? Yeah, I'm in from $90. I bought it a while ago. I bought a little bit more recently, which probably is a bad call. I mean, you're starting to see separation. But to Christian's point, NVIDIA is starting to show like not leadership here. That's not good news for AMD. That's not good news for AMD, because they are clearly not NVIDIA. So if NVIDIA is looking tired, that's not good news for AMD either. So, talking against my book here, but rally's probably to be sold in this name for now. I mean, I believe in Lisa Su long term, But if you're in this, buying this for a trade here, I think you're doing it wrong. You want to be buying more momentum names for trades. Investing, I'm still trying to figure out after 25 years, the completely different animals. Some of my best investments have been contrarian investments. Think about Bristol Myers, where I bought that, just from a valuation perspective at 40. But again, those are tough trades. The turnaround stories are tough trades. You're buying AMD here looking for a turnaround story. And I'm not sure it's coming anytime soon, especially when the leader, NVIDIA, is looking tired.
Well, AMD and a bunch of other companies were, I think it was the Barclays conference. They spoke at the Barclays conference. But, I want to talk about Marvell too. And just a second. But
just
I was watching
two markets here.
I was watching this because, as to the point I was just making is that, hey, they did not have, they didn't have a great quarter, and the reaction has been, here's another point, right? It goes down on earnings, and since then it's been basically dead money. But if they're speaking at a conference, they can introduce something new. They could come out and say, hey, we've got a new chip that is going to be faster. But I didn't get one headline, in terms of like what they said out of that conference, and hence the stock sold off. Now it bounced a little bit. It was in there for a couple days. But, on a day where on Friday where Broadcom was going up, very nicely, this was not one of the names to be in. And like one of those names that was the recipient, right? So here's like to my point, right? Marvell had a huge, had a big move on earnings, right? But look at it kind of come in again, and it found buyers, right? Now it pulled back, right? So again, you kind of have to think of it like, because again, everybody's looking at some of those names that are pulling back, and they're saying, hey, that's attractive. Well, this was more attractive because this pulled back from this move on earnings day up to 118, kind of came in a little bit down to 105, 106. Now again, this is hindsight 2020 is your analysis.
Sure.
I didn't buy it, but you could see, like, look at so positive news on Broadcom. Look at what Marvell does. It jumps right back out to new highs. And that's the case. And that's why I basically say, hey, watch these names that had good earnings corners. It's better. Now, again, like, I'm not an advocate for chasing after that type of a move. But if you're patient, again, it's not going to, in this situation, it didn't come all the way back. And that's a big earnings gap to deal with. But, it did have a buyable dip.
And again, we're seeing separation here in tech, even in chips, where you've got some winners and some losing. Marvell relentlessly bought. Applied Materials, if you want to talk about chips as well, kind of the opposite story here, continues to go down. So AMAT 210 back in October. Obviously, the market's done pretty well overall, but this one continues to leak. So it's like when they lose their mojo, even if the valuation is somewhat attractive on some of these names, it's like momentum trading just continues to dominate overall. And I mean, this is, the issue with value investing. It's not that it's dead. It's just that it's not sexy. And this market is all about sexy names. I mean, we talk the sexy names all the time. But, you look at major media and they want a sexy story. They want a cool story. And when you don't have a cool story, it definitely is difficult to get that story back. Like you said, you need a catalyst. You need something to kickstart it, a new product, something to give you hope, something to get the story going again and get investors excited. Nobody's excited in AMD right now. Nobody's excited in Applied Materials right now. But Marvell gets a good quarter, gets a good story, and all of a sudden, they are excited about that name. So I think, again, we just continue to remain in those momentum market. And it's hard. When you're coming into seasonality, and some people are asking about seasonality here, when you're coming in, momentum continues usually with seasonality. Like into December, it's usually a continuation momentum. Obviously, even to the downside, because you get tax loss, selling, going into the end of the year. A lot of times, what I call the January effect, and everybody has a different name, I've always called January effect, is reversal of the trends, where you actually see the winners become losers and the losers to become winners, at least for a short period of time. But we are 2 weeks away from January here yet. So I highly doubt, if you're already positioning yourself for the January effect, you're way too early, because momentum could continue in a lot of these names. Do I think Tesla shows some weakness come the turn of the calendar? Probably. Do I think, some of these other beaten up names show some strength, turn of the calendar in January? Probably. Do I think you're early on December 16th? Definitely.
Yeah, and I also another way that I kind of phrase that too is like reversion to the mean trades. And yeah, there's a definite seasonality. There's a trade there to do. I think it's the names that hit 52-week lows around that time. They often revert back to some extent. I don't think it just at 8:30. The only thing that we have today for economics is Empire Manufacturing just hit, which is basically flat. That's not really a big market moving data point. Flat versus estimated 10. We do have at 9:45 this morning, so 15 minutes after the open, you're going to get PMI data. So that's the S&P Global Manufacturing Services and composite data, which is a good point. We're going to have a guest come on here shortly, but I just wanted to go over what the calendar is really quickly for the week. Tomorrow, you're going to get retail sales. We're also going to get some housing data on the 18th, and then on Wednesday is the Fed meeting. We haven't heard from any of the Fed speakers because they're in a quiet period, but we will have the Fed meeting on Wednesday, looking at Fed fund futures. They're pretty much pricing in that they're going to cut interest rates by 25 basis points, and then probably what the highlight of that of the press conference will be is what Powell thinks going forward.
So yeah, it's a light week for economic data. The earnings, the calendar's got a few names. Micron's probably the highlight here on Wednesday. Again, cyclical business would be very interesting to see because Micron has just kind of been waiting for this earnings report. I do have a long-term position in Micron here. It's up here this morning. I don't know if there's a catalyst here, if there was a rating or something, because it's up pretty significantly.
Sorry?
Micron MU. It reports Wednesday.
Yeah, that should be an interesting report. They did have a good report last time. It didn't really take the stock anywhere.
It took it up and went straight back down. Such a cyclical business. Micron's a tough investment because at certain pockets of time it can really run, and then other pockets of time it can really sell off. It's very cyclical. Obviously, DRAM pricing, is very cyclical as well. We kind of had the blow off top. I mean, when it went from 80 to 157, basically doubled, in the first half of this year. That obviously got ahead of itself. Now it's come back in. Is there a play? I mean, I think Christian's going to be, the right with, let's see what the earnings say. If the earnings are decent, maybe there's a play here. But if they disappoint, this thing could be right back down in the, $90 area. So it's hard to play this thing ahead of it, knowing, how cyclical this business is and knowing how wild the earnings are on Micron. It always seems unpredictable. It's a stock that looks cheap, at obviously certain periods of time when it's like sometimes 3, 4, or 5 times earnings. And then all of a sudden the earnings go negative and you're like, wow, this was not a good investment. So it's a tricky stock to look at from valuation because the earnings are so cyclical. But, we're going to get Micron, Jabil Circuit, Lennar, we're here from the home builders, which I haven't looked at the home builder charts in a while here. So we
not
could
good.
Go to that.
Yeah,
again, the value trade here. So there you go.
Yeah.
This is group them all together. Group them all together. Stop right now everything you're doing. Take the stocks you're looking at and throw it in the value column or the growth column. The value column for almost everything is significantly out of favor right now. If it's got a cool story and growth, those are the stocks that are going. I think that trade reverse has come the calendar come January, but I think you're early here yet. So I think if you're trading, it's going to be easier to trade momentum still, as we're still obviously, coming into Santa Claus time, coming into the end of the year. People get excited. They want to have those stocks. The money managers want to have, the winners on their books, the losers off their books, tax loss selling going on as well. All of those things come into play, which tell you on December 16th is usually not the time to call for reversal of trend. January 2nd, a lot of times to call for reversal of trend. Is Craig hiding in the background? Do you have Craig here yet? We're looking at the bottom. Again, I got logged out here, so we're going to get my permissions back here.
I don't see him yet.
Okay, we're waiting on Craig here. Craig will be here soon.
Also, Nike reports. So here's another one that's basically, fell on earnings. It's had a couple bad earnings, a couple quarters of lackluster earnings. And the last time it reported, it went down, and you could see it bounces a couple times, but the bounces are very short-lived. So it has a chance. I think that's Thursday, I believe.
Yeah, it's Thursday. Thursday night, Nike, along with FedEx. But again, these are value stocks. Value stocks are not in favor here right now, folks. So, and I mean, I'd almost argue I don't even know how much of a value stock Nike is anymore because the earnings have come down so far. It used to look cheap, you know, it was $100 trading 12 times earnings. Now it's 28 times forward earnings because the earnings have come down. I mean, Nike's all sorts of problems, all kinds of problems. So can they turn it around with a quarter? Well, there's always that potential here. Do you bet on it ahead of it for a turnaround story? No, I don't think I do. I think I want to see the numbers and then see the reaction to the numbers, because even when they beat, sometimes the reaction isn't that great. Reaction is more important than the numbers themselves.
Yeah, but I mean, and this is the thing, right? So they have the chance to redeem themselves or to talk about something positive, and we'll see. I mean, the earnings are always an unknown event, but we'll see if they can kind of turn it around. FedEx is another one that was mentioned in the chat. They're going to report as well.
Yeah.
This is another one that's kind of difficult, I think, for me. But they fell last time on earnings, and they're kind of just, again, they rallied back to the earnings gap and kind of fell apart there a little bit over the last week. But that's more of a more of like a value stock too.
And again, this is the value. So again, first thing I'm doing right now, if I'm trading, I'm throwing in value category or growth category. And right now, value is not in favor. FedEx is a value stock. It's 13 times earnings. Go to UPS, its brother-in-law here. UPS is trading at 14 times earnings. These are value stocks. You're like, how do I go wrong at 13, 14 times earnings? How you go wrong is the story is not hot right now. How you go wrong is when they just miss by a little bit. All of a sudden, value investors like, whoa, and growth investors are like, I ain't touching FedEx, no story there. So, I mean, where you want, obviously, and you don't see it very often, is when growth meets value, where you actually have a value stock that's a growth stock that's actually, reasonably valued. We haven't seen that, you don't see that too often. So sometimes you just got to go with what's working here. Which brings me, again, we're waiting for Craig Johnson, who's going to be on here in a second. When we see him, Christian will let us know. But brings me to Google, because Google has been out of favor here for a long time. Its valuation is not crazy. I'll just, going in here, trading 21 times forward earnings. It's not a crazy valuation here. But all of a sudden, it's been in a consolidation period again for a very long time. Really the entire year, we went nowhere with Google. We started the year up around 155 bucks. A couple weeks ago, we were 167. I mean, really, we haven't done a hell of a lot on Google. But now all of a sudden, since I've been away, since you guys, got all excited here, there must have been, something that happened last week which caused it to gap up. Again, I was away, so I wasn't paying attention to Google headlines, but you've had a gap up. Now you get a little check back here. I mean, this is a stock that has the potential to run into year end.
So I did get long this one, and
you're long.
Yeah, so I did get long this one. This was on this day, and I talked about we talked about this setup too last week, because and this kind of just goes to our conversation so far this morning, is that Google had been an underperformer in the big Mag 7 group. To your point, it is a bit cheaper than its peers. I was just listening to somebody talk about that this morning, about how many of the Mag 7 names are getting a little bit expensive. I guess they trade between 25 to 30 multiple, but Google's been the cheaper one, but it hasn't had the catalyst. It hasn't had anything to really get it going. You've heard things about like how the AI has been taking away from their search business, so it's been a downer for it. But it comes out last week, and they say that, hey, they've got this quantum chip, and it's faster than like anything else. People are still trying to figure out like what you're going to be able to use it for. But hey, if you've got something, quantum computing is very hot right now. Hence, and we could go through a couple of these charts, which I've been trading a couple of them. But here's IONQ. I got long this one too last week for a small trade, QBTS. These things are hot. Now, these are risky stocks, in my opinion. This is a $4 or $5 stock. And then the other one, RGTI, is another one that's been very, very hot. This thing was $3 like a couple weeks ago, is now at $7. So the quantum computing theme is very, very hot right now. So great timing for Google to announce that they're coming out with, or that they have the technology for this super fast chip. That for me was enough, and I missed it the first day. I missed it the initial day on the gap up. So I did have to decide, like, okay, I'm going to get involved in it, and I took some targets in it, and then I bought a little bit more back. I added back one of the targets that I took, and I did that on Friday.
So you're still you're still in the name though.
I am. I'm going to try to see if this is going to be like the catalyst that really gets it going. Something where I could be in for more than Google for like a couple days. So I'm
Yeah.
trying it. I don't know yet, and that's why you have a stop price, because I don't know if this is enough of the driver to get it out of the woes of lacking in diminishing in Google search, as well as in the regulatory crosshairs. But that was, if you look at this group, Dennis, last week, it could also be that some of these names are getting out of the microscope of the regulators with a new administration coming in, because Apple made it out to new highs. Meta's all of a sudden Meta got going, in the last 2 weeks, right? This was also kind of just
Yeah.
going sideways. So I have to think that, with less of a chance that there's going to be, heavy regulations or fines, these things really got going. Amazon has been a beast as well. That is broken out. So all of a sudden, we're talking about kind of the haves and the have-nots, right? All of a sudden, these names became the haves again. And just
Yeah,
when
the
you
mega,
count,
the big seven. I mean, and maybe it's a good exercise to go through, because now Google's, Christian, to your point, starts to look up here. But we just go through Meta. It's been looking up for a while. Amazon, consolidation for 5 days, and I've got a big position in the long-term portfolio. Just looks like it's going to go higher. We talked about it at 200, 32 times earnings, as cheap as Amazon's ever been. Alternatively, Apple's most expensive it's ever been, I believe. Trading now 10 times sales, somebody said over the weekend here. I don't know where the earnings is. Let's just go quickly look, but I think it's 36 times earnings, 40 times current earnings, 33 times forward earnings. So it's about as expensive that Apple's ever been. But the story's hot here. Microsoft perking up, making new highs. I mean, we know Tesla's just been, just running relentlessly. And then you got Netflix too. I mean, really, out of the Magnificent Seven here, they all look pretty dang good right now.
Yes. All right. I see our guest backstage. Let me try to do this. I apologize in advance if it doesn't work, but
We're going to try to do the guest intro.
Let's try to do the guest intro.
There he is, Craig Johnson.
Good morning, guys. How are you?
I think we might have sent you the wrong link, so that's why I just re-emailed you there. So me and Christian are running the show, and we're pretty good with stock market commentary, but we're not very good at running the technicals behind the show.
Nope.
So Joel runs that, AB runs that, Josh sometimes runs in the background, but we got two people who know how to talk stocks and don't know how to run a show. So, but we do have Craig Johnson here. We know Craig can talk stocks, and we know Craig's always got a lot. We've been talking for the last 30 minutes, Craig, about basically momentum trading. And, it's kind of the tale of two markets where you've got momentum or you don't in this market. And there are winners and there are serious losers here as well. And we know you always look to momentum as well here, Craig. So I just want to start with, what are you looking at?
Well, yes, I am looking at momentum. And to your point, guys, think about it this way. There's lots of people here on the show that have bought in ETFs over the years. And I would imagine none of them bought an ETF because of valuation, right? They bought it because they like the theme, they like the momentum that's in the stock. And I also remind people that if you think about the number of assets out there, according to Lipper, Lipper shows that there's $11.5 trillion in equities, and half of it is now in ETFs. So again, valuation isn't going to matter. Momentum is something we're continuing to watch, and individual stocks we keep an eye on. Like you guys, we keep an eye on things like the Mag 7 stocks. But I got to tell you, Dennis, if we pull up some charts, and let me do this real quick.
Yeah.
So you pull the charts up, it'll be easier, right?
Okay, Craig.
But the point I want to make is, if you look at like Microsoft and you're looking at the chart of Microsoft, and if you were to put relative performance on there too, right? So you're looking at it relative to the S&P 500. The point that I'm making to people is, well, you're not making relative strength new highs in Microsoft right now. And some of these Mag 7 stocks haven't made relative strength new highs in a while. I appreciate we're making money on an absolute basis, and that's what we can eat every day is the absolute performance. But relatively speaking, there's been a lot of other stocks out there that have been putting up some better performance than just the Mag 7. And so, things for me that I've been focusing on, and let me just throw up a couple things here. Let me just show you this.
Let me see. Dennis, do
I
have the
think Craig
permission?
can take over.
Okay.
Yep. Let me just share my screen, get to the right one. Let's see what pops up here. Entire screen.
And we get Joel in the background here, and he knows how to do this stuff. So's AB. So, but Craig's gonna work it in the background here too. See if we can show the charts.
Now let's see. You guys can see my screen, I take it, right?
Not yet, but we might have to change. Christian, there's settings there to be able to show his screen just at the bottom.
Just let me know if that's the screen that you want to show, and I'll add it. I think you've got one with notes. When I see you bring up the charts, I'll add it.
Yep, I got one that says on Santa Watch. Is that that's the one I wanted?
There you go. We got it. Boom.
Yeah. So the point that I wanted to make here with a lot of these things that I'm talking about, I'm focusing on, is still the best is in financials, the best is in industrials, the best is still in tech. And what I'm focusing on, what I called out this week right here for all our institutional clients is I called out some of these stocks, and here they look pretty good from just a positive trending perspective. These over here, I pointed out as not working at all at this point in time. And these are ones that are either shorts or take your profits on and leave, those kind of names. But definitely energy is not working out here. And then, Dennis, let me come back to this one real quick.
Yeah.
As an example, I'm going to throw this chart over here.
Sure.
Of course, we can talk crypto anytime you guys like too. But if I look at a chart like Microsoft, here's what people need to think about, right? Look at this relative performance in here.
Yeah.
Again, and then compared to price. Now look at NVIDIA. There's so many people that are trying to day trade NVIDIA. It's incredible. But my point is on this weekly chart, stocks like this end on a whimper. Like, look at the volume on NVIDIA. You've been below a very simple moving average now for quite some time. When stocks bottom, they usually bottom on high volume. You're done. You're washed out. But when stocks like actually die from sort of a bull market run, they die on a whimper. And that's kind of what you're starting to see with NVIDIA. Again, great company. I'm just not sure it's going to perform as well as other names out there that, to me, look more constructed of a bottoming out. If I was going to trade something, why not trade Hood in here? Look at this huge, massive base in here. It's pulled back the last couple of days. I think that looks great. Or how about every restaurant I've gone into, they're pulling out this toast hand device. Take your order, pay your bill, do all that stuff. Again, a nice little pullback in here probably looks good. Or better yet, on the database management side, all these companies have spent a tremendous amount of money putting in stuff for AI, stuff for those things. But now they need to spend on the software. And I see kind of a bigger double bottom forming here on a weekly chart. So these are some of the things. And if I'm going to be in the industrials, why wouldn't I continue to ride this trend?
WAB.
Correct.
And again, we have seen the last couple months that broadening out. And it's not broadening out to all sectors, though. To your point, energy stocks just look terrible here. It's broadening out to other tech stocks. What we've really seen is other tech stories. It's like tech is still leading the charge. But just, we've seen NVIDIA take a pause here. We've seen certain names start to pick it up like Google, which is, constructive because it's been pausing for a while. But you've got so many other smaller tech names that, have taken the lead. And again, you brought it up right off the bat, just Kathy Wood and ARC Innovation here. I mean, is Kathy back? Because she's been in, a period where she's underperformed the market for a very, very long time. But in the last couple of months, her stocks are very much outperforming the overall market. Is Kathy back?
Well, I think some of these stocks are definitely on their way back. I mean, whether it's their innovation fund or ARKK, I mean, these things all look like they're bottoming and they're taking off. These look very similar to a lot of the names, Dennis, that I just brought up a few moments ago. Again, I kind of like some of these things for the setup trade, but there's other things that I also like on an individual stock basis that I'd point out too. I mean, Dennis, what do you want to do with this one?
AppLovin. It has run and run and run. And now, though, the problem is momentum's starting to slow down here. So I'm somewhat concerned here. You go from 150 to 400. We're maybe in a digestion period here, but, we were now 100 points off the highs. So I'd probably sit out here for a little bit, just wait to see what happens. I'm probably just sitting on the sidelines on this one. What are you doing, Craig?
What I've been doing with this one is we own this since I think it was about May we bought this thing.
Fantastic.
2% portfolio. It went for a 2% position in the portfolio to 7. So part of my discipline is when I get over these sort of numbers, I got to cut it back. I've already done it. I think there's more people that need to cut this thing back as you get into early part of next year. So I'm waiting for a pullback on this. Whether we get this thing back down to 263 or something in that range wouldn't surprise me. But I think pullbacks back to the 50-day are probably going to be bought. This is how I would play that one.
Yeah.
And then,
so you're waiting for another little downturn here, and
correct.
then maybe that momentum momentum comes back into this name. So momentum's taking a pause here for at least the last 10 trading days.
Yep. And then look at this sort of new breakout in Coherent in here, COHR.
Yeah.
Kind of a nice breakout on these guys. I think these optical stocks are sort of on their way back. People haven't focused on it, but I'm hearing more and more stuff in Minneapolis where they're actually now running fiber to the home. And again, talk about the rewiring of the United States. What it would do for these optical companies would be absolutely enormous. But it would certainly give people a lot of the good data.
Hey, Craig, is AAOI one that you like in this space?
AAOI?
Yeah.
I mean, again, another great looking chart. I mean, the stock is just broken out again. I mean, buy it on a little bit of a dip back toward, 26, back toward the 50-day. Probably not a bad play either. Also, don't forget about sort of the integrated communication stuff with Twilio. Look at that huge base that's been formed on this one that nobody cares about. That seems pretty interesting.
We talked exactly about this type of stock, and it's kind of like the Cathy stock that we talked about, where they've had 2-3 years where these stocks obviously fell significantly. We're talking about Twilio was up at $457 back in 2021. But now, it had the big 2021, 2022 where stocks got cut up down 70, 80%. But now you've had 2 years of basically 23, 24 consolidation period. And now all of a sudden, you start to break out. Snowflake's a similar story where you had, a stock very much underperforming for a very long time, but starting to show life. And again, that's maybe this broadening out into other tech names. Maybe this theme here where, and maybe there's some other names here too. What else do you got on that list, Craig? Maybe there's some other ones that maybe haven't gone yet.
Well, I mean, don't forget about Datadog. This is another one that's been on that list that's doing well. And then everybody keeps talking about sort of the growth in, growth in computing, and they keep talking about the growth in quantum computing. One of the best plays in quantum computing, which is probably a little slower pace than the big momentum stocks, Dennis, would be things like IBM.
Yeah.
This is one of the big leaders in here. And if you come back and you look at your weekly chart, absolutely nothing wrong with these guys. I also know from the whole AI, rollout, we do need to do a lot in terms of networking. And Arista Networks is another fantastic
breaking out
that just continues to keep working in here. I mean, nothing wrong with those guys. And, you had a little bit of a pullback in the Monday.com, but again, seems like a pullback right back toward the uptrend support lines in here, ones that continue to keep buying. I mean, everybody's sort of bemoaned that it's been a bad year for markets. And I'm kind of like, we're kind of up in the high 20-ish% range for the S&P 500 year to date. And everybody's like telling me like, oh, it's been a terrible year. I just don't think, Dennis, to your point earlier, that they really got on board with the momentum stocks that started to work. Because which of these charts here, to all the listeners, does any of these indices look broken? The answer is no. And then if you come in and you start looking at how of a decent year this has been, look at this. Back-to-back 20% returns. Our forecast for next year is 6,600. So again, not going to be as good of a year as the last two we just had.
You're thinking 10%.
Yeah, high single digits, 10% would be good. And then if you put this into the perspective too, that if you look at back-to-back 20% plus years, you tend to see small mid-cap stocks outperform. So for those traders out here, again, they've loved trading the NVIDIA. They've loved trading all the Mag 7 stocks. But I think your better opportunities are going to be down, call it sub 10 billion market cap.
Would you still stay with the tech names, Craig? Would you still, or would you go out, because obviously there's other names, to your point, maybe we should just talk energy stocks for a minute here, because you got oil that's held up fairly well. But something else happening here where the XLE just continues to go down despite oil actually going up. It's rare that you see oil going up, but the oil stock's going down here. And you can look at valuations on a Chevron, on an Exxon, and say, oh, it's really attractive, even an Oxy, Warren Buffett name. But I mean, the momentum here is just completely broken.
Totally broken. And people might have forgotten that under the prior Trump administration, I mean, it was drill, baby, drill. And they're talking about increasing production, getting prices down again. So you come through and you start looking at these stocks, and it's like, there's no reason to buy these things in here right now.
Hey, Craig, just a quick question. And by the way, love the names that you're bringing up. I'm a trend and momentum trader, so this is music to my ears to go through some of these themes that are really working in the market right now. A question about financials, because financials were one of the leaders this year, and they've kind of cooled a little bit. Now, do you think if these things begin to kind of ramp up again, would you rather be, looking at the banks per se, or, fintech has gotten very hot. You talked about Robinhood. Would you more or less stick with kind of the growth end of the financials and more of like a Robinhood, a Square, that kind of like more fintech type stuff?
Well, I think a combination of both, to be honest with you, because what I'm looking at over here is I'm literally just looking at our portfolio, right, that I put out with the most recent Informed Investor. And what we put into the portfolio is we put in, obviously, we've had the Apple Oven, we've had the Toast, we've had some of these names, but there's nothing wrong with a Square. I mean, this looks absolutely fantastic, bottoming out in here. You'd even call this a huge multi-year inverted head and shoulders pattern.
Yeah.
And you broke it through the neckline. So trading wise, any little pullbacks back into here, into this zone, is probably a good spot to look for this thing to do this. And look at your earnings numbers in here doing this. I mean, you got the fundamentals going with you. You got the earnings revising up in here. It seems like a pretty decent way to play it. But again, don't forget about, the KRE with the banks, these regional banks. And the reason being is the current administration, which will be leaving on the 20th of January, has not been very favorable to doing M&A, acquisitions, those kind of things. I suspect, and again, if I was to look forward, say 6 months, we're probably going to have an environment where there's going to be more consolidation taking place among small, mid-cap banks. And I suspect that is going to be a pretty good driver for some of these names. And in terms of things like maybe, again, I'm not calling out acquisition candidates at all. I'm just saying if I just go down cap, and that's what I've done with our space, like what's wrong with the stock trending like this? I mean, nothing. Another beneficiary of some of the changes in terms of regulation in Washington is clearly going to be Synchrony Financial on the financial card side of the world too. Like these stocks are just breaking out and doing really well. I mean, you just broke out to a new high in here. Any little pullbacks, great opportunity to be buying this thing.
Awesome. Just one other question, because you kind of teased, you said, hey, I could talk about crypto. Would you rather be playing crypto straight with, going long Bitcoin or Ethereum, or would you rather play it kind of indirectly? We already talked about Robinhood, but do you have anything in that space that you're really liking?
Yeah, so if I look at a measured chart on, say, crypto, let me see if I can switch to a different set of charts. 1 second. I do a measured move on the cryptos, and I would say for me, again, let's just put this up. I'm looking at these charts all the time, but if I go through and I just look at the daily charts in here, I can easily see, Bitcoin just breaking out of this sort of consolidation area it has been. I did a measured move that took me to 133. Wow. Is where I sort of see, crypto ultimately going. I also think that there's some of these altcoins out there which are interesting from a trading perspective. Alchemy Pay is one that I've been looking at. Algorand, ALGO, is another one I've been looking at. Unlike my kid, I'm not a fan of Dogecoin. I just think there's too many coins getting created. But again, that's me. I also think Ethereum needs to play some catch up to Bitcoin. So if I was to play one of Kathy's plays, which I am playing, I've been sort of playing ARKY for a catch up to the move we've seen in Bitcoin. And just technically on these weekly charts, I've just reversed the downtrend on some of these things. Now, that's how I play it from the actual coins. I still think if there's two things to watch in crypto, and I have said this for years, and Dennis, you've heard me say this, you got to watch Fidelity from an institutional perspective, and then from a retail perspective, you got to keep your eye on Coinbase and Hood. And I look at Coinbase in here, and we're getting pretty darn close to coming back and taking out the first week's trading range. I mean, at this point in time,
it's been an incredible comeback. Like Coinbase going from 400 to 30 bucks, you know, at the end of 2022 to 316. You know, we're up 1,000% from the lows of 2022. Yeah,
and again, this is my father thinks I was absolutely out of my mind, but he gave my kids some money for college, and I bought Coinbase with it in here.
Ooh, fantastic.
Right? Yeah, so it's been a great move. So it certainly has helped their college funding, but he was not a believer in the crypto. But the way the regulations are changing, this is probably between this and Robinhood are your two cleanest ways to play this. Going in and looking at some of the miners and stuff like this, it's not quite as clean way to play it, but I keep hearing about more of these miners starting to convert over some of their mining capacity to put it into hyperscalers, and when they do that, they're seeing their stocks really appreciate very nicely. I mean, there's all sorts of these names out here that all look like this, that are all sort of playing some of that game. They've got the power, they've got the data centers. They just need to retrofit them a little bit for some of those hyperscalers. And again, these stocks are very nicely appreciating from a trading perspective.
And if Trump's going to support crypto, you got 4 years as administration, to your point, turning over January 20th here. I mean, that's going to be a tailwind for these stocks as well.
I would think so. And if there is some sort of Bitcoin reserve that comes into play, I mean, what has made America great over the years? I mean, from a high level perspective, guys, it's the fact that the dollar has been the de facto reserve currency for the world, period. And that is what has allowed us to print the money we've been able to do over the years. And I think the current administration maybe doesn't quite understand the significance that the world is going digital. And Trump coming in with the new administration wanting to do a Bitcoin reserve, continuing to perhaps keep the dollar in sort of the king dollar position, is probably a good thing that we see happen. I just don't know if a lot of people can get their minds around the fact that if you go other places in the world, everybody thinks about their currency relative to the dollar all the time. And in many parts of the world, they rather have dollars than their own currency. Like here in the United States, we don't even think about anything but dollars. We don't think about euros as much, or Swiss francs, or other different kinds of things. So keeping that dollar strong, keeping the reserve currency here, really important things to do. And that Bitcoin potential reserve could be a way of doing that.
Craig Johnson.
Thanks so much. This has been amazing. And again, like I said, you know, when you go through charts like this and the themes right now, because you know what we've been seeing is really just you know, a huge move into some of these areas, and there's been obviously other areas that have been lacking. We were talking about value stocks, so you know, on cue with, you know, talking about where there's momentum and strong trends in this market. Thank you so much, Craig.
You guys are welcome.
It's such a good and again with Craig, it's such a good segue. Like, just having this feels like it was the momentum show, and he couldn't have been a better guest for that, to come in, show you the pockets where the momentum is continuing, showing you really what matters in trading. Especially investing is still a different animal. 5 years from now, it's always hard to call what's going to be, you know, the good investment, what's not going to be. But trading is easier to call, you know, and obviously, Christian, you've made a lot of money trading momentum strategies for a very long time. You know, I trade a lot of momentum as well, but Craig is like your momentum analyst. He finds these pockets of momentum. He's making calls, you know, turnaround stories here. And I mean, that is the exercise that, you know, this market, when in this type of market, you really need to do. There is value markets. I mean, we do get into those from time to time where value investing takes control and starts to look better. But I mean, we've been in this momentum market not for a couple of months here. We've been in this momentum market for 2 to 3 years here now. Well, obviously, we had the ridiculous run up in 2020, and then we had the significant sell off, obviously, in 2021 and 2022. But really, since the 2022, we're 2 years into this now, where momentum strategies have really, taken hold, and some of these stocks have had incredible comebacks. To Craig's point, Coinbase, $31 back in 2022 is $300. I mean, there's been some serious money made.
Yeah, absolutely. So we've run a few minutes over here, so you got a little bit of bonus time on Monday with Triple D back in the saddle.
We're back.
So we'll look forward to that for tomorrow. And yeah, guys, have a great day. This was amazing to kind of go over. I think just to reiterate, gives you a sense of like what's working in this market versus what we talked about, what's out of favor. And we'll continue to monitor for rotations, but it is what it is right now. Thanks, guys. Have a great day.
Thanks, everyone.